Hi, Sean Gavigan here. Wanted to get something out on the sort of a state of the insurance industry video. It's going to be a couple minutes. I'm sure if you check the bar at the bottom, it'll tell you how long it's going to be. So if you don't have time to watch the whole thing right now, maybe set it aside for later. Prior to COVID, we were headed to a hard market as a result of some financial factors combined with some severe weather that we had, and that affects everyone. More and more real estate is being built in flood-prone areas and storm-prone areas. If you just take a town like Sea Isle, for example, and you knock down a 1950s style cottage, type house that might cost, $125,000, $175,000 to build, and you replace it with $2 million worth of duplex, and then a storm comes, you're going to have a big payout. So multiply that across all the country, with the economy being the way it's been, relatively for 10 years or so. Headed into COVID again, we had this hard market that we were headed for. The pandemic kind of accelerated that and caused some issues. So on the auto side, quarantine period was good because nobody went anywhere and auto losses were down. The years prior to that, the auto fatalities rose from the year prior for the first time since the 1970s, basically since when seatbelts became mandatory. Every year there was steadily a slight decline in the fatality rate of auto accidents in the United States. In 2018, that went up for the first time from 2017. That's the first time that there was an increase in like 40 years. Again, it increased in 19 from 18. And it's all because of, distracted driving, not only the severity, but the frequency of accidents as a result of people looking at maps, texting, emailing, putting on music, whatever it might be. COVID chilled that out. And backed that off, and then, but the homeowner claims went up because people were home, they were cooking, starting fires, there were plumbing issues. So, you had issues that came from that. Coming out of COVID, we had a lack of, people working. People were, staying home for whatever reason, and then there was, whether, some people didn't want to get sick. You had people, there was a lot of free money that floated around there for a while, and we had some labor shortages. With that came the supply chain issues, and then the costs of everything have gone up. And when you think of what insurance does, it pays to fix stuff, whether it be a vehicle, repairing, replacing, repairing a home after a loss. When the value of things and the cost of doing things goes up, insurance will increase. The cost to replace a car, the microchip issue. No chips equals no new cars. What new cars are out there are more expensive. The fewer new cars are available, the price of used vehicles will skyrocket. So what was a $20,000 vehicle 3 years ago is now probably a $26,000, $28,000 vehicle. When those get totaled, the insurance companies pay out 40% more than they intended to, and we have a problem. So when people are getting the renewals, you will see increases. What used to be a marginal increase, anything under 5%, it's outrageous now. Anything under 15%, you're probably doing okay. That said, we can try to move people from one carrier to another. We just need to be mindful of inspections. So back to the fact that insurance companies are not able to charge enough right now. They have to file rates with the state. So if the state doesn't give them the increase that they deem necessary to stay profitable, they'll find some other way to get off the risk or to get rate. So they might reduce or remove discounts. If they don't feel like they're getting enough money on an account, they might have someone go out and inspect, come back and with some unreasonable demands, and then you say, what, I'm just going to go somewhere else. So we do need to be careful now. Again, you're insured at the right place. We do have great relationships with a lot of our underwriters, and we can tell you, hey, listen, it looks like you're going to save $250 to move from this carrier to this one, but you might not want to do that, and here's why. This company's gone out and routinely requested that at least $1,000 worth of work be done for them to stay on this risk. So we don't want to put anyone in a bad spot. We're never going to cut coverage. We're not going to put you in a spot where it's going to cost you money to move to a different carrier. We would rather have the difficult conversation. Here's what you could save. Here's why we would suggest you don't do it. Or in some cases, it's worth a roll of the dice. We leave the old policies in effect. You might have to pay a month of premium out of pocket for the new carrier and a month with the old carrier to let the new carrier inspect, see what they come back with, whether it's recommendations that you don't want to comply with, or in some cases the reconstruction costs get shot up after an inspection. And if that's the case and you don't want to stay with them, then we just cancel that back to the inception, and you stay with the other carrier that you were with. Or you do stay with the new company, we cancel the old one back to the inception of the new policies, and you get that 1 month's worth of premium back. So we just need to be careful, but luckily we're in a spot where we can help, and we have the time to help people because new business we're not doing as much because we're not going to put people in a bad spot. We'd rather say we'll catch up with you later. But give us a call. We can look to move it at first. If not, we can at least check to see if there are discounts. Maybe a kid driver has gotten better grades, and we can add a good student discount. Maybe there was an alarm system added or a new roof put on, and we can find some discounts that way. Or at the very least, we can check current coverages, deductibles, and talk through that and see if it makes sense to make any changes to save some money. So if you want to talk, click the Calendly link in the email and schedule some time. And with inflation and so on, I'm hoping that in the next 6 months to a year, things break loose a little bit. We'll see. Fingers are crossed, but we can do what we can do to help, and give us a call. We'll talk soon.